Good day, traders, and welcome to the premium video newsletter for Thursday, August 8, 2013. Let's start off with the latest fundamentals, and then we will work our way to the technicals after that. The Labor Department said the number of individuals filing for initial jobless claims in the U.S. rose by 5,000 to 333,000. This is better than the expectations of a rise of 8,000. Several members of the Feds spoke in recent days and gave unofficial statements that the stimuli may in fact be coming to an end sooner than later. As long as the Federal Reserve quantitative easing program is in place, even when there is a tapering, which could come as early as September, and the Fed funds target rate remains 0 to 25 basis points, bearish news will only have a temporary negative impact. The reason for this is simple. The Fed's monthly infusion into the financial market is keeping us from going lower artificially. The stock market did interpret the news in a positive manner and did rally as we expected. The number of setups to the upside yesterday was overwhelming, as I mentioned that yesterday, and that usually leads to a higher opening when numerous stocks are rallying towards the end of the trading day. The next day or two look bullish for the stock market, but I wouldn't put too much into this rally. We didn't sustain the new highs for a very long time previously, and as I said a few weeks earlier, that seeing the market make all-time highs in the summer months is not very common. So I'm very skeptical that we're going to see a strong rally to the upside, but that doesn't mean we won't be moving up to test the old highs and possibly take it out once again by a few points. But unless something completely unexpected happens, I'm not expecting a several hundred-point rally anytime soon to the upside. The only sector that's not joining the party to the upside today is the semiconductor sector, and this is worrying me a bit. However, we are seeing strength in other sectors such as transports and small caps. So considering that earnings in the semiconductors were weaker than expected, I don't think it will hold up the broad market too much during the next few days. A report showing China's exports and imports increased more than anticipated in July. Exports increased 5.1%, when only an increase of 2% was expected. The better than expected Chinese trade data helped the Australian dollar to gain some momentum. However, gains were limited by news that employment in Australia decreased by 10,200 workers in July, when a small gain had been anticipated. The next resistance for the September Australian dollar comes in at the 92 level, and this is good for traders who are looking for an opportunity to short the Aussie at a higher price. I'm watching this market carefully, and I think we will continue the momentum into tomorrow's session. I don't know if we will close higher before the weekend, as traders will likely take profit from the small rally. But I'm looking for slightly higher prices going into the next trading day, so watch this market carefully and only position yourself to the downside because the trend is very strongly moving in that direction. The US dollar is continuing its decline and is coming close to our exit target, which is at the 80.5 level. I think we may get there in the next few sessions unless we have a technical bounce, which is most likely to happen before the next level. However, if the strength in other world currency markets keeps gaining, we may see a drop to our target level. I have a buy stop in place at the 80.5 level to close out my short position, and if you are short the dollar, I suggest you do the same, at least for the next few days. The euro advanced to a 7-week high after a report showed German exports in June increased more than anticipated. The influence of this bullish news was partly offset by a report that showed that Greek unemployment rate increased to a record in May of 27.6%. Technically, we are just a hair below strong long-term resistance level, and I'm very interested to see how the euro will react when we reach the low 134 area. If we do muster enough momentum to break past the 134 area this time around, and I'm not really seeing this type of strength coming into this weekend, but we may break above it if there's sufficient amount of buy stop orders in that area. I'm skeptical, but if we do break the 134, the next level up is 135.5. The Japanese yen advanced to a 7-week high against the US dollar, but gave back some of the earlier gains after the Ministry of Finance reported a smaller than expected current account surplus. The Bank of Japan concluded their 2-day policy meeting today and stating that Japan's economy is definitely beginning to recover moderately, although uncertainties will remain. In addition, they left unchanged their ongoing bond buying program. I do believe the yen was pricing in most of this during the last several trading sessions, and I do believe it's topping out for now. The next question is whether or not the yen is going to go back down to the base or stall somewhere in the 102 to 101 area. If you're long, I suggest lightening up the position at this stage, and if you're thinking of going long, I recommend you wait for a fairly good-sized correction, more likely than not all the way down to the base area, which if we maintain the uptrend, and I think we will, is going to be just a hair below the 101 level. Before I get into the setups for tomorrow, I want you to know that once again I'm showing a disproportionately large number of stocks pointing to the upside. This tells me that there's a higher than average chance of us opening higher tomorrow. It doesn't tell me if we will close higher tomorrow, but it does tell me that we have a higher chance of opening higher. All the setups are 4x4s to the upside. Place a buy stop 15 cents above the high today, and if filled, place a sell stop 15 cents below the low today. If the orders are not filled before lunchtime New York time, cancel the orders. The ticker symbols are SPY, which is the S&P 500, Qualcomm, which is QCOM, Starbucks, which is SBUX, AFL, which is AFLEC, and lastly, XEL. That's it for today's tutorial. Have a great night, everyone.